Investing in stocks is one of the means to create wealth, as the stock market has the potential to yield attractive returns. So let's understand, what is a share market? A stock market is a platform where stocks and other securities like bonds, currencies, commodities, and derivatives are bought or sold. The stock market gives the companies a platform to list their stocks for sale to raise capital. It also gives investors the platform to trade in listed stocks to generate returns. What is a stock? Meet Adriano. He loves coffee very much, and for that he runs his own coffee house. But he wants a house with proper space, furniture, good suppliers, talented waiters, etc. He calculated, and the cost comes to rupees 20 lakhs. The thing is, Adriana has rupees 2 lakhs with him. So he decided to choose stock. Stock is a part of the ownership in a company. Each stock has its value, and it depends on the company's worth. Adriana needs rupees 18 lakhs more to open his coffee house, so he divides his business into 9 even shares and attracts 9 partners. Each of them invests rupees 2 lakhs in his business, becoming part owner of 10% share of the coffee house. 6 years later, the coffee business flourishes. Adriana has opened more coffee houses across the country, and the company's value is rupees 2 crores. Adriano got capital he needed without borrowing money nor paying interest. He and his 9 partners increased their initial investment from rupees 2 lakhs to rupees 2 crores. He is aware of the risk involved and how the stocks gave him additional money to grow his business. Participants of the stock market. Traders and investors. Traders are those who buy and sell stocks on the stock market. They can hold stocks for less than an hour and are looking for short-term wins. Investors are those who invest in the securities on the stock market, and they hold stocks for years invested in a company. Investors and traders can be domestic retail investors, institutional investors, asset management companies, foreign institutional investors, NRIs, and OCIs. Stockbrokers or intermediaries. Stockbrokers are middlemen through which trading in stock and other instruments can be done. As per SEBI norms, investors can buy and sell shares only through authorized stockbrokers. Brokers or intermediaries charge a fee or brokerage on the transactions done through them. Further, we have the companies. Companies like Tata, Reliance, etc. participating in the stock market offer their stocks for sale. They need to list themselves on the stock market to offer their stock for trade. Stock exchange. The stock exchange is where the stocks are listed that is bought and sold. The listed stocks, bonds, and derivatives are then traded by investors. In India, there are 2 main stock exchanges: the National Stock Exchange (NSE) and the Bombay Stock Exchange. Sensex is the benchmark index of 30 most traded companies on BSE, and Nifty the benchmark market index of 50 most traded companies on NSE. We have the clearing corporation. Clearing corporations settle stock trading between traders. When a stock is traded between investors, one investor sells the stock while another buys it. Clearing corporations locate the buyer and seller of a particular stock and settle the trade between them. They debit the buyer's account and credit the amount to the seller's account. In India, there are 2 clearing corporations: the NSCCL, that is National Securities Clearing Corporation Limited, and the ICCL, that is Indian Clearing Corporation Limited. These are the wholly owned subsidiaries of National Stock Exchange and Bombay Stock Exchange. Clearing Corporation acts like the protective umbrella for all the market transactions. Depository and depository participants. Trading in stock requires investors to have a demat account and is offered by depositories. It is a place where financial securities of the investors are held in dematerialized form or in electronic form. You can view these shares in the electronic form on your broker terminal. In India, there are 2 depositories: CDSL, that is the Central Depository Services Limited, and NSDL, that is the National Securities Depository Limited. CDSL is the wholly owned subsidiary of Bombay Stock Exchange, and NSDL is the wholly owned subsidiary of National Stock Exchange. When the investor issues a purchase order with the stockbroker, then the stockbroker processes that order and instructs the depository to transfer the shares to your demat account. Depositories, however, do not offer demat account facilities directly to investors. Investors have to open the demat account through a depository participant, DP, that acts as an agent of the depository. And finally, we have SEBI, that is the Securities and Exchange Board of India. SEBI is the market regulator that regulates the stock markets in India, right from the investors, stockbrokers, companies, stock exchange, clearing corporation, and the depository. It frames the rules and regulations that determine the working of the stock market. The regulator ensures that the participants adhere to trading laws and also regulates the market. There are two main types of stock markets. The primary market is the main market, where companies list their stocks for sale for the first time. This listing is done through an initial public offering, IPO. IPO is, therefore, the first public offering of stock by a company. IPOs allow companies to list their stock on the market to raise funds. This listing is fresh and is open for a specified time. Investors can bid for the stocks and then buy the stock at the issue price as specified by the company issuing the stock. Once the stock is offered to the public through an IPO in the primary market, it can be traded in the secondary market. Trading happens between investors and traders. The secondary market is the place where listed stock and other securities are bought and sold by traders continuously. I hope you understood the terms related to the share market, and the next video you will understand how does the share market work. Thanks for watching. Please do subscribe for more videos.